Hey guys, this is Chris from Cryptocurrent, and today in this video I'm going to be going over what leveraging is, because I'm sure a lot of you have heard it and are interested in it. Some risks involved with it, of course, what longing versus shorting is, the differences, how to use this exchange I'm going to be showing you, the FEMX exchange, what a spot market versus the contract market is, and liquidation prices, more or less. So firstly, what leverage is, to put it as simply as possible, you can imagine you're going to this exchange, and you want to trade with more money than you have. So say you only have $100, but you want to make more money with that $100 in hand. So what you do is you go to an exchange like FEMX or Bybit or BitMEX, any leveraging platform. You go to this exchange and you give them your $100, right? And depending on how much leverage you use, that could be 2x, 3x, 5x, 100x. That means how much, like the multiple of money they're going to give you in return for the money you gave them. So say you gave them $100. If you 5x'd it, they would give you in return $500 to trade with. Or if you gave them that $100 and you 100x'd it, they would give you, 100 times that $100. So they'd give you $10,000 to trade with. So how do they make money with this though? What they do is they make sure that they're not losing any money, as like if you screw up a trade, they're covered. So what that means is if you borrowed 5x from them, which means you now have $500, what ends up happening is if you lose in any trade that you're doing, $100 worth of that $500, you are what we call liquidated. And that just means they will cut you out of the trade automatically, and they will take the $100 you initially gave them to cover their loss. And of course, it makes sense that the more leverage you use, the less, room for error you have. If you're using 100x leverage, the price only has to go 1% above or below where you thought it was going for you to be liquidated, for the exchange to take your money and cut you out of the trade. So here on FEMX, this is one of the newer, more trusted and easy to use leverage exchanges. Up here, there's ways you can buy crypto, but that's not really what I'm going to be going through. This is what I'm going to be going through. The products they provide. So they have spot trading, just like on Binance. You can buy Bitcoin or Ethereum or Litecoin for its market value, just face value. Like if Bitcoin's $20,000, you can buy, $20,000 priced Bitcoin. The contract trading is what I'm sure you guys are a little more interested in, which is the leveraging. It's the same thing. So if we go ahead and open this, we'll see that it looks similar to a standard, spot market exchange. It looks similar to Binance. There's only a few differences, right? This is the main difference. This little leverage thing down here. So if you were to, or no, let's go over all the aspects of it, I guess. Up here you have the price of the asset you want to trade. Here on FEMX, they have a lot of different type of assets that you can trade, not just Bitcoin. You can trade Ethereum against, or this is the spot market actually. This is what you can buy for US Tether, just at face value. Down here at the contract markets is what you can leverage. So if you felt like leveraging Ethereum against the US dollar, you could do that. Or, Cardano, ADA. They have a lot of options for potential, longs or shorts. Anyways, let's just say we're gonna, open up a position in Bitcoin. So what you do here is you decide whether or not you want to buy a limit order or a market order. And what this means essentially is a limit order is a price that you want your order to be filled at. So say you don't really want to buy right now at the current price of 23,929. You want to buy, let's say, down here a little lower at 23,000, So say you want to buy, you think it's going to go down to 23,000, so you go ahead and change this, to 23,000. And then you submit it. Right, you go 25% of your balance, in the exchange, and then you can open a long or a short. So what a long is that you're betting on the price to go up, right? You think that once you bought, you think the price will go up, and if you're right, you will make, money, you'll make profits. For every percent that you're correct, you multiply that by the amount of leverage you used. So say Bitcoin goes up 1%. If you used 5x leverage, that means you're now up 5%. That's why this is kind of attractive to a lot of traders, because if they're confident in the direction or in a trade, they'll leverage that and they'll pull out more profits than they would just trading on the spot market. So let's say, you wanted to open up a long position. You think it's going to go up from this level, right? So what you could go ahead and do is just put in the current price. You would buy it, and you'd probably get filled. You decide how much quantity of your account balance you want to use. So say you had 1 Bitcoin and you wanted to, only use half of it. You'd go ahead and click the 50 and, put 0.5 Bitcoin or 5 Bitcoin or whatever. You'd go ahead and you decide how much margin you want to use, right? So say I wanted to use 5x. You'd go ahead and click the 5x button and, click the long. I currently don't have any Bitcoin on this exchange, so I can't, totally go through it with you guys, but it's the same thing. It'll work the same no matter which exchange you're really using. Anyways, over here, you decide how much leverage you want. And I would really, really recommend you guys to stick to the lower end of things here. I know it's tempting to think, oh, if only it goes up 1-2% and I used 100 leverage, I just doubled my money. Yeah, and you could get lucky, you could make some good money. But that takes the strategy out of it. That takes the analysis out of it. That's just pretty much gambling. Because, no one can be correct down to the percentages and exact numbers. Here on this channel, we're more about trend following, right? The general trend here is up, but there's going to be times when it dips a little bit lower or pumps a little bit higher, and you can't predict these tiny, minuscule, market deviations. You can only, grasp the trend. So the higher the leverage you have, the more risks involved, the more profits possible. But, if you have 100x, you're betting on the price to go up, and it goes down just 1%, you lose all your money, you're cut out, and you're going to be upset. So I would just obviously recommend, stay below 10x, all right, just kind of as a guideline, because then with 10x, you have around 10% wiggle room for the asset to go, whichever direction you want to bet it. But anyways, you'd come up here, you'd put the price you want to purchase the asset at, the quantity of your balance that you want to go into the asset, and then whether or not you want whether or not you're betting, for the asset to appreciate or depreciate in value. Once you do that, you go ahead and, click submit here, and then you've opened your position. And it'll show down here, right? It'll show you the symbol, so what asset you're trading, how large, your position is, the current value, and then the price you got in at, and the mark price is the price you would be selling at if you sold right now, right? So right now, let's say we bought at, this price over here. We would be, this would be our mark price, $20 above where we currently are. Closed positions is just, your like receipts almost of past positions. Active orders is what's open. It's very similar to open position. Conditional orders is something I'm going to be going into more detail in a future video, but conditional orders is what a stop loss is. It's what a conditional buy is. It's simply put, just telling the exchange, if the price gets to X level, execute X action. That's what a conditional order is, and they're very useful. I'll go into that in another video. That's a little bit beyond just leveraging. But yeah, so here you can see the active orders, your closed positions, like your history, your open positions, what you're currently in, and then your fills is how much of this order up here was filled, right? So if it was completely filled, it's just going to say, Bitcoin, exact quantity, the 20% of your balance or 50% of your balance. This right here is a little confusing, obviously. This is the order book. It's not too important, really. I really weigh the importance of the chart far more than the importance of the order book. But I will still, be going through it in another video. Here you have the chart, and thanks to the previous video, now we kind of know how to navigate it. We have this line tool, so we can draw things. We have the time frame buttons up here, to go into the daily time frame or 30-minute or whatever. The indicators or compare symbols, the different, tools we can use, the percentage gain type thing. So we can, easily navigate this. Once you've opened a position, long or short, and you want to say close it, you want to take your profits. Say you were right, you thought Bitcoin was going to go up and it did go up, and you want to take your profits. You'd go here into your open positions, and you'd click this button. It says close position. It would say, do you want to close your position? You go ahead and click it yes. Anyways, this is essentially what longing and shorting is. It's giving the exchange a certain amount of money, and in return they give you more money. However, if with that money you lose the money you originally gave them, you'll be cut out of the trade, you'll be what's called liquidated, and then, you're going to have to fund your account more or get more money somehow. So liquidation's not a very good thing. You guys want to stay away from that. I do see a lot of people that are new to crypto, and they're very eager to hop into leverage platforms and leverage trading. I would strongly advise that you should stay away from leverage platforms until you're very comfortable trading on spot platforms, just like Binance. You need to be comfortable with buying and selling normally at market values before you get into leverage trading. But I know there are some of you that are more experienced in the crypto space and just in trading in general. So yeah, Femex is just an exchange for leverage trading that I would recommend. They're pretty reputable, trustworthy, and they have a good track record as well. I hope with this video you kind of understood what leveraging is, what longing and shorting is. It's betting, it's betting if the price will go up or down or whatever. How to kind of navigate the user interface of Femex, like the products they offer, the leveraging, the differences between that, and also the assets you can trade on it, because there's a lot. That's why I like Femex, because they have a lot of variety. Most exchanges don't have this much variety, but Femex does. Understand the risks involved. It's at really high leverage levels. It's just gambling pretty much. But yeah, anyways, I hope you guys enjoyed this little walkthrough or explanation of what leverage trading is. If you guys have any questions, feel free to drop them in the little comment section, and I'll get back to you. I'll answer them as soon as I can. A like would be very appreciated. Subscribe if you're new, and yeah, stay tuned for more videos coming in. I'll be doing, conditional buys in the future. How to set a stop loss, how to calculate your risk, and anything else you guys really want. Just drop a comment down, and I'll get to work on another video for it. Anyways, thanks so much, and see you next time.